What's up YouTube, it's Sanan-Sanani. You know, a young couple starting out investing in real estate bombarded me with a series of questions that I answered, and it was quite helpful for them. So today we're gonna go through that. The questions were, Sanan, is it better to buy a property on my personal name, or should I create a limited liability company and hold it inside there? What are the advantages and disadvantages of buying a property on my own name? What are the pros and cons of buying a property on a company name? And is it better if my company name has my name or family name included, or is it better if that's left out? And should I keep my second property in the same LLC company or create a new one? So that's a lot of questions, and I'll answer them all. That's an important fork road that we all cross time and time again before purchasing our investment. And whether it's time for you to invest or not, it's important that you know this, because you will have to make this decision in your life sooner or later. And in this video, I'm answering all those questions and revealing the closest thing to magic. So you better pay attention, because I'm going to demonstrate how you can smash the like button and learn how I invested in real estate with almost no money down. Let's begin. Real estate investing is a business, guys. While you as a real estate investor may not feel like you're part of a business, you essentially kinda are. And like any other industry, real estate businesses can be classified under structures, different structures. And the most popular structure for a real estate business is a limited liability company, LLC. Limited what? Limited liability. The title alone is enough to get real estate investors on board, but we need to know all the pros and cons of a real estate LLC in order to decide if it's the right fit for our business. What is an LLC? When real estate investors form a real estate limited liability company, it becomes its own legal entity, okay? Apart from the individual real estate investors. This means that a real estate LLC can have its own bank account, have its own tax ID number, and do real estate investing business all under its own name, not yours. A real estate LLC, in a sense, is liable then for all its own actions. You are not liable. And a real estate limited liability company is somewhat a cross between a corporation and a partnership. It has some positives from each type of real estate business, which is why it's a popular choice for investors. Why should you start an LLC? Limited liability, of course, right? The most obvious advantage of a real estate LLC is the limited liability for real estate investors. With any real estate investment, a real estate investor is taking on risk and liability, right? So forming an LLC would be a good option to limit a lot of this risk when investing in real estate and keeping it inside this LLC. Personal assets of LLC members are protected from any issues that come from investing in real estate inside this LLC. So you're protected, right? The real estate LLC and its assets come under fire in any kind of situation like bankruptcy and debt, you're protected. Okay, if facing bankruptcy, a bank can only come after the assets that are inside this real estate LLC. It's its own entity. You might be thinking, well, hey, I can just buy a property on my own name and get limited liability insurance. Smart, but not smart enough. Yes, you can, but an LLC offers more protection for an investment property owner than limited liability insurance. Next, tax benefits, because who doesn't want to save money? Another major benefit of an LLC is the advantage of LLC taxes. Did you ever think you can make money off taxes?
No.
I mean, everybody hates taxes, right?
Taxes.
Guess what? I love taxes.
I love it. I love it.
In fact, all real estate investors who know what they're doing love taxes. We form an LLC simply for the benefits from the taxes. Taxes are not paid directly by the real estate business. Instead, a real estate LLC only files an informational tax return because it's eligible for pass-through income taxation, because you are a company and you're buying from a company. I'll give you a real example. So when I purchased my first fourplex property that cost $245,000, including VAT, and VAT is 18% here, I set up an LLC and put a down payment of 30%, which is $73,000, $73,500. And by the way, in your countries, especially if you have a history of good income, you should aim for getting a down payment of 5 to 20%. Yeah, I had to put a high down payment here because when I first started, I was in a foreign country, Tbilisi, Georgia, with no proof of income. No residency card, nothing. So it was more of a risk for the bank to lend me money, and I was quite surprised that they did lend me the money. But anyway, I put 30% down, and the minute I opened up the LLC and purchased the investment, the 18% VAT, which was $44,000, came into my VAT asset, my company's VAT asset, which I was able to file to claim back the minute I made the investment. So basically, I received the fourplex property with only 10% of the money. $29,000. There are cases where I purchased a property with only 20% down payment, and when I filed for a VAT back, it took like 2 weeks and I literally got 18% back, meaning I've only put 2% down on a property. I've done this before. That's another creative way you can buy a property with no money down. So the money you get back could be either used for renovations, all right, if the property needs any. If it doesn't, you can immediately rent it and put that money you just got back on a down payment of the next property. Another thing about receiving VAT back is that if you're purchasing materials for renovation, the materials you're purchasing all have VAT included in this price because you're buying it from a company. So you can claim that back too after you're done with renovations, and that money could be used for your next down payment. I've also got an 18% discount from materials purchased, not just the property you bought. Next, a real estate limited liability company is allowed more freedom. It's structured so it doesn't have too many regulations or restrictions to stick to. For example, there's no fixed structure for management and no restrictions on ownership. Foreign ownership on a real estate investment is allowed through an LLC. Okay, it's not forced to have any regular meetings or keep micro-detailed records. Even the distribution of cash flow is decided by its own LLC members. But let's see, why might you avoid a real estate LLC? Let's look at the disadvantages of a real estate limited liability company. One would be fees, and more fees. Okay, while a real estate LLC allows you to save money from tax deductions, there are costs associated with forming the LLC as well as fees for keeping it in good legal standing. Right, these costs can depend on how an investment property owner chooses to set up the LLC, on his or her own or through a lawyer or using an online company. Right, they can also vary depending on what state the LLC is formed in, what country the LLC is formed in, but you're gonna have accounting and filing expenses, registering a lawyer, website creation and maintenance, hiring a registered agent, operating agreement, annual real estate LLC fees, and other miscellaneous fees, all right? Next disadvantage is piercing the corporate veil. An investment property owner involved in a real estate LLC has to ensure that the LLC is an operating entity and it can be distinguished from the LLC members. Otherwise, real estate investors will lose any protection that this LLC provides. So if you're thinking of opening up an LLC, try to avoid putting your family name as part of the LLC name because you will have a chance of losing that protection that an LLC provides. Next, in an LLC, rental income is taxed. So the advantage of purchasing a property with your LLC is that you can claim VAT back, right? If the property you purchased was from a company and it has VAT on it. But one of the downsides is that the rental income from your property will be taxed as company income. So in my case, 18% of my rental income gets deducted for VAT, but I want you to realize it's all right. If you were able to get 18% back from your purchase, 18% back from your materials, who cares if you give a little extra to the government? After all, you just got yourself a golden egg, and you've got to feed the goose that lays the golden eggs, the government. Right? You don't need to think that the government is taking a cut from your money, from your rent money. You need to say you're supporting the goose, you're supporting the whole system. And you just add their cut on top of the rental income and see it that way instead. It's just mentality. So guys, this is it. These are the pros and cons. You should not make an LLC under your family name because they can pierce through that and go after your own assets. All right, you need to take advantage of what an LLC is and what it provides. It provides limited liability and really good tax benefits. All right, hope that was helpful. If you enjoyed today's video, please hit a like button because it's completely free to do so and it helps YouTube push my videos to more people. And subscribe if you're interested in real estate investing. Our videos are getting better and better. Our services in Georgia are getting stronger and stronger. And if you have any questions on real estate investing, I'm always happy to help. You can DM me on Instagram, you can leave a comment below and contact me through my website if you're interested in Georgia, www.sterling.ge. Till next time guys, see you next Monday.